Kia ora, and welcome to Tuesday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news mostly about the US-China Geneva agreement and market reactions. First up, China and the US agreed to cut tariffs on each other by 115%. For the US, that means they will go down to 30%, for China down to 10%. Supposedly the deal is for 90 days to allow further negotiations, but it would likely be endlessly extended. Oddly, China was the only major power to impose reciprocal tariffs, and this deal seems to make them a clear winner, with the US meeting most of China's demands for de-escalation. Other countries who regarded themselves as friends or have or are still negotiating with the US are now in a much worse position. That includes neighbours Canada and Mexico, includes Japan and, of course, the EU. Separately, India, who made a big effort to deal with Trump, is spurned, and they have other security reasons to feel offended, justifiably or not. US merchants will rush to return to China's supply, but it isn't clear that China will be doing the same with US products. The US trade deficit with China, already elevated, is likely to surge after this type of Trump negotiation success. Equity markets liked the retreat, and Wall Street took off. The US dollar strengthened, probably not in a way the Americans want, and the bond market sees more risks and increases its risk premium. Gold and Bitcoin fell sharply. The size of the tariff taxes became clear in April with the release of the US budget statement. These taxes cost US importers $16 billion in the month, an increase of $9 billion from a year ago, or $500 million a day. Far lower than the $2 billion a day claimed by Trump. Of course, they will now fall from here, and it seems will never reach the claimed levels, so any budget boost to tackle deficits, a clearly stated policy objective, is likely to be now in the bin. The May report from the USDA shows that grain production worldwide is rising, while consumption is not. So prices are falling, especially in the US, in response to their trade policies. More will be used there as feed grains. Oddly, this report noted lower production and export opportunities for beef, but overlooked mention of what is presumed to be a surge in beef imports. They did say dairy production will be lower there and imports higher. Across the Pacific, Chinese vehicle sales came in for April up 9.8% from the same month in 2024. These sales ran at 2.59 million units, an all-time record high for any April. NEVs took a record 47% share in the month. In all this, foreign brands are struggling to get a share or even keep their share of this expanding market. The US Treasury 10-year yield is now at 4.46%, up 8 basis points so far today. And Wall Street has taken off on the China tariff news, up 3.1% in Monday trade. And the price of gold will start today at $3,223 an ounce, down $100 from yesterday. And oil prices up $1 at just over $62 a barrel in the US, while the international Brent price is just over $65 a barrel. And the Kiwi dollar is now at 58.5 US cents, down 60 basis points from yesterday at this time. Against the Aussie, we're down 20 basis points at 92.2 Australian cents. Against the euro, we're up 30 basis points at 52.8 euro cents. And that all means our trade-weighted index starts today just under 67.4 and down 20 basis points from this time yesterday. And the Bitcoin price starts today at $101,401 and down 2.5% from yesterday. Volatility of the past 24 hours has been modest though, just on plus or minus 1.5%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. We'll do this again tomorrow.